Hey, so I wanted to continue the conversation a little bit on how the unsecured capital programs right now are just changing everything. They're very, excuse me, very easy programs to use. All it really requires from a basic level is credit scores above 680 and up, and that you've got some strong credit history via trade lines. And the trade lines just basically mean 3 to 5 credit lines that you have on your current credit profile. Could be a couple of credit cards. It could be car loans, any type of line of credit that you've got available, or even within your history on your credit profile serves to help in the qualifying of the amounts that you would receive. So let's say that you've got a 680 to 700 score, and you've got 2 to 3 credit cards in your credit profile now, and maybe you had another private loan for something else that you bought. It could be furniture, furniture line, car line. It could be a mortgage. Any of those things that you have reporting on your credit. All of those things help us qualify you for more capital. If you're thinking like in terms of, let's say you've got 3 credit lines, you've got a 685 credit score. We intake the information. We see how your credit history, just a quick soft pull, no hard pulls. See how the credit history appears. We come back with a number from our lenders that says, hey, based on the profile we see, we can do this type of lending very quickly. And it could come back and say, hey, look, we the credit line, the trade lines are great. We can get them qualified for anywhere between, and typically there's a number that comes out, and it'll say something like 60 to 80,000, or it'll say something like, hey, we can get them 300,000 in a combination of the term loans and the credit card stacking, and or it could just say, hey, we can based on what we've seen, we can get them the borrower $45,000 in installment loans very easily. So it goes very fast by way of a quick soft pull, gives us a snapshot. Sometimes what we'll see in the qualifications that will say, hey, listen, if they can prove or show us a W-2 or tax return that shows a minimum of, so let's just say something, we see this a lot, 25,000 in income, we can get them X amount approved, or 45,000 X amount. There have been some instances where we've seen that the underwriting has come back and said, hey, if they can show a minimum of 150,000, we can get them up to 500,000 in pre-approvals. It just really depends on the credit history, the profile, all of those things. But with those approvals, it's just a matter we set up a quick call with the lender, we get right into it, and we get the information we need. Typically, just last year's tax return shows us what we need to see on the verifiable income. We got the credit, and we're moving. These deals can move very quickly. They can fund within 3 to 5 days. Approvals within 24 to 48 hours. On the credit card stacking, the cards come in the mail, and we have specialized lenders that help pull the cash down off those cards at 0% interest for you. For anywhere from 12 to 18 months. And after the 12 to 18 months, what happens is they'll do a credit check, see where your score is, and then the rates could be anywhere based on the credit score. Great credit could be 6%, 8%, 12%. I don't know. We leave that to the actual credit card companies at that time, but that is just how it works. So after the 0% period is up, they'll do a quick soft pull, see where the credit's at, and then they will give you a rate to use on those cards. But the great thing about using the credit card stacking, for example, if you're a real estate investor and you're getting 200,000, 300,000, or even 100K, you can pull that cash off, use it in a flip, turn that flip after 3 4 months, get the cash back, use it again, and just keep turning it on the card. So as an entrepreneur, whether you're using it for your real estate, we've had folks that have salons, barbershops that use it, transportation, no matter what it is, but it gives you the ability to use that money and turn it frequently at 0% interest. So it gives you the ability to use it, invest it in your business, use it to scale whatever, whether you have products or services, whatever it may be. In the cannabis industry, they're using them to buy more inventory, to stock the shelves. They're using it for expansion capital, at times. If they need another 40, 50, 60, 80K to open another location, fill it with inventory, open the doors. It just varies. It can be used for anything entrepreneurial, essentially. But just wanted to give you a quick update. How does it work on the unsecured capital? Again, it's a combination. It can be just a credit card stacking. It can be the installment loans, term loans. It just really depends. And the term loans can go anywhere on the installment side, anywhere from 12 months, 18 months, 24 months. Those are the shorter period time frames. When you get to the actual term loans, those can go 5 years, 7 years, even 10 years. So imagine getting a term loan for 10 years for 300K, and you can draw down that cash, go turn it in a few deals, real estate deals, or again, expand your shop or your stores, and be able to pay it back after being able to use it to invest in your company and scale. So that is just a little bit on how it works. Again, if you've got questions, you've got some deals that you're looking to get qualified, to get funded, you need help, hit the link below. Submit the deal today. We'll have one of our private capital consultants give you a call very quickly and see if we can't get to the bottom of it. Thanks so much.